Tube Investments of India Limited. Until now, we've been analyzing companies in different sectors, in different industries. But this time, we've brought an analysis of a company which is into multiple businesses. It's a conglomerate of different businesses, which is Tube Investments of India Limited. If you're new to the channel, please do subscribe and hit the bell icon. And don't forget to join our Telegram channel where we share a lot of daily market news, views, and analysis. So let's get started. Tube Investments India Limited is a Murugappa Group company, which is a very well-known, renowned group in India, and investing in one of the companies in such groups itself gives us a lot of confidence as shareholders. So being a Murugappa Group company, it is into various businesses like precision steel manufacturing, tubes manufacturing, steel strips manufacturing. All these are mainly used in industrial and automotive components, like industrial and auto chains, door frames for the four-wheelers, and especially branded bicycles. We have seen a lot of brands like BSA which are manufactured by this company. They are into this business for more than 70 years till now, and they cater to various industries like automotive and railways, construction, mining, agriculture, and a lot of different industries are spread over which use their products. This company is growing organically as well as inorganically by taking several acquisitions, as we'll discuss in the coming video. So Murugappa Group, let's talk about this group. For people who are still unknown about this group, this was founded in 1990, so there's a long legacy. They are into 30 businesses, and out of that 30 businesses, 10 are listed companies. They are in leadership positions in many businesses which they are into, and they have also done alliances of technology and various joint ventures with different companies across the globe. There are several brands which we use in daily life are a part of this group, and more than 50,000 people work under various companies of this group. To discuss a few names of companies of this group, you can see Carborundum Universal, the Chola Group, then the Coromandel, then EID Parry, which is into sugar, Tube Investments, Parry Agro. So there are several businesses which we have observed as investors while investing in the stock market, which are a part of this group. Now let's talk about the history of this company. They started manufacturing bicycles in 1949, which was a joint venture with a foreign company, and it was called TI Cycles of India Limited. In 1959, they started manufacturing tube products under the company Tube Products of India, and later this got merged in 1959 in TI Cycles, and the name was changed to Tube Investments of India Limited. In 1965, they started another business to manufacture metal forming products called TI Metal Formings, and in 1979, they bought a public issue and got this company listed on the stock exchanges. In 1996, they started a new manufacturing plant to manufacture metal tubes in Pune, and in 1998, another new facility for manufacturing car door frames was started. So there are several milestones since this is a long journey, but I have concised them into the important ones to discuss. In 1999, they acquired a company called Steel Strips and Tubes Limited, and in 2001, they bought 42% stake in a company called Chona Mandalam Investment and Finance Limited. So they ventured into the financial services business in 2001. So alongside the journey, you have observed two things. The first thing is the company is doing a lot of capex in their own business. They are diversifying into new businesses, and they are also doing inorganic acquisitions into different industries of businesses. In 2001, they did a joint venture with a Japanese company for general insurance. So in financial services, they started general insurance also. And in 2003, they entered into the fitness segment, bicycles and other equipments with their brand BSA Workout. In 2005, they started manufacturing motor frames and tubular components. And in 2010, they started new manufacturing units in Gujarat and Uttarakhand. Apart from the units which we are discussing in the history, there are several other capex also done. We are only discussing the important ones. In 2012, they acquired a company called Shanti Gears. So now Shanti Gears is also a Murugappa Group company, which is a subsidiary of this company now. And in 2016, they demerged the financial services business with the manufacturing business, and Tube Investments got separately listed on the stock exchanges. In 2020, they took over another company called CG Power. So this was again a very big acquisition done by this company in the recent times, which led to a lot of buzz around this company, and the share price also shot up after this acquisition. Now let's talk about the management of the company. The executive chairman of the company is Mr. M.A.M. Arunachalam, who is the senior member of the Murugappa family. He has done MBA from the University of Chicago, USA, and he has more than 25 years of experience in working across different business verticals. He is also a board member of several Murugappa Group companies. The executive vice chairman of the company is Mr. Vellayan Subbaiah, who is a BTech in civil engineering from IIT Madras, and he's also done MBA from University of Michigan. He has more than 2 decades of experience in different sectors, and he's also on the board of other groups of Murugappa companies. Now let's talk about the business of this company. This company is into multiple businesses. A few businesses are done under the company as their own business, and a few businesses are through subsidiary companies also. So broadly, you can classify their businesses into 4 categories. First is the mobility business, the second is the engineering business, the third is the metal formed products business, and the other businesses which they are newly venturing into. Starting with the mobility business, they are presently into the TI Cycles of India, which manufactures bicycles for different age groups. And now they are also venturing into the electric vehicles. In the engineering segment, they manufacture engineering and auto components for various industries. In the metal formed products, they manufacture products which are made of metal, which are used in different industries like chains, door frames, and they also manufacture sheets and chambers which are used for the railways. In their other business verticals which they are newly starting, they have started the business of TMT bars, and they have also started manufacturing truck bodyworks. Now let's talk about this business in a little more detail. Under the mobility segment, which is the bicycle manufacturing business, their vision is to be a preferred business in the categories of fitness as well as recreation and personal mobility. And since their focus is a lot on the personal mobility, they are venturing into the e-bikes and other three-wheelers also. So their brands like BSA, Hercules, Track and Trail and Montra come under this segment, and we are well aware of these brands as these are very popular brands which we know right from our childhood. The next business segment of this company is the engineering business. Under the engineering business, again there are multiple businesses. The first one is Tube Products of India. In this they manufacture precision tubes which are used in the automobiles, and brands like Bajaj, TVS, Hero MotoCorp and Tata Motors are their customers. In the next segment, which is the TPI CRSS. This business manufactures steel strips. So steel strips are also used as auto ancillary as well as they are used in the engineering product segment. In the third business under the engineering segment, they manufacture TI machine building. So in this they manufacture customized machines based on their clients' requirements. These are the different businesses which are getting covered under their engineering segment. Now coming to the third segment, which is the metal formed products. As we discussed, these are products made of metal. So in this, the first segment is TIDC auto chains. So in this they manufacture auto chains which are used as auto components in 2-wheelers and 4-wheelers. They are in fact market leaders in this segment. In TIDC fine blanking segments, they manufacture blank products which you can see in the photo in the second from the left. So these spare parts are used in 2-wheelers and 4-wheelers. In the TIMF auto segment, they manufacture car door frames, window frames, and their guide channels, impact beams. So like this, there are different car accessories which they manufacture in their third segment, which is TIMF auto segment. The fourth segment is TIMF railways, in which they cater to the products used by railways. They manufacture rolled form sections for wagons and coaches. They manufacture sub-assemblies. So like this, they manufacture parts which cater to the Indian railways. So these are the 4 broad product categories under the metal formed product segment which is done by this company. The last segment is the others. In the others, they group the new businesses which they are starting into. So as of now, these businesses are not substantial portion of their revenue, but to discuss, they have started businesses of TMT bars, they have started manufacturing truck body works, and they have also started industrial chains. So these business, as they focus more, they will keep growing and add to substantial portion of the revenue going further. The other businesses which are done through their subsidiaries are CG Power Industrial, which was a recent acquisition, then Shanti Gears as well as the Sedis, which is a French company. So CG Power is into design, manufacturing and marketing of products which are used in power generation, distribution and transmission. And Shanti Gears is into power transmission products again. And Sedis is a French company which manufactures industrial and engineering chains. So these are the different subsidiaries of this company through which they also do multiple businesses. If you look at the segmental revenue from engineering business, they get about 30% of the revenue, metal form business about 9.7, close to 10%. Through mobility business, they get about 7.7%, power systems about 12.4%, industrial systems around 31%, and the other businesses which are the new businesses about 6.5%. Now let's understand the trends in the industry in a brief way, as this company is into different businesses. We'll not get into much facts and figures of every industry in detail. We'll just discuss the broad trends. So their main exposure of different businesses is into the auto sector, and in auto sector you can see trends like BS6 migration, vehicle scrappage policy, attraction of people towards personal mobility post COVID, as they want safety and security for them and their family. Urbanization, expansion in the connectivity by building different roads across the country. So all these trends are leading to more and more demand in the auto sector. In the auto component sector, you see that people are willing to repair rather than replace, also getting substantial portion of their revenue from the aftermarket sales, which is growing. The government is very keen in growing the network of railways in India further. So this will create a lot of tailwinds for their auto components business, which is exposure to the railways. This company, the industry as such, is doing a lot of capex, and the existing machinery of the companies are getting modernized. So this will increase the demand of their products which are used in industrial machinery, as well as their business of making customized machines for different businesses. Another trend which we observe these days is the environment safety, as well as people are getting more health conscious. This will lead to trends like using more of electric vehicles, as well as use of more bicycles in India. So all these trends which we have discussed will generate a lot of tailwinds for different businesses which this company is into. Now let's talk about the competitors of this company on a broad level. So in their bicycle segment, they compete with brands like Hero, Atlas, A1, Firefox, Roadmaster. And in their precision tubes business, they compete with big companies like Tata Precision Tubes, Penna Tubes, then Balaji Tubes. And in their engineering heavy machinery business, they compete with companies like ISEC, Cummins India, Schaeffler India. So like this, there are several competitors in the engineering business also. In their auto spare parts and engineering spare parts business, they compete with companies like Renault, Diamond by Timken, IFB Industries. So there is no identical competitor for this company which is into several businesses like this, but the individual businesses which the company does has a lot of competition. It's in its own sector. Now, what is the competitive edge which this company has compared to the other of its peers, as well as somebody who is a new entrant in this industry? They have market leadership in a lot of businesses which they are doing. Their brands have a lot of value and trust in the market, which gives them easy penetration into newer products and newer markets and to grow their businesses. There is a long-lasting customer relationship, as the company has an age-old legacy. There are long-standing relationships with different customers. From them, they get repeat business, and those customers don't change vendors so easily. They are very technologically competent. They completely keep upgrading their plant and machinery quite often, and the scale at which the company is operating generates a lot of cost efficiencies and economies of scale for the company, like Tube Investments of India. A lot of businesses which the company is doing are complementary businesses. They are backward or vertically integrated, which helps them bring in operation efficiencies and improve margins of both the businesses. Now, what is the growth strategy of this company in the future? There is a very clear growth strategy by the company. They have divided their growth strategy into three parts. The first part is to grow their core businesses. In their core businesses, they are cash flow generating businesses. They generate a lot of free cash flow for them to fuel their growth. So all the existing businesses, they will do a lot of capex. They will go for geographical expansion, and they will also keep adding new products to their existing businesses to grow them organically. In the second way, they will be starting new businesses in the same company. So they are looking at the new businesses like optic lens manufacturing, which is also having a global demand. They are entering into manufacturing of electric three-wheelers, which is again a very strong business in the coming times. So like this, they will be entering new businesses in the same company. The third growth strategy which the company is focusing on is inorganic growth. So in the past also, you have observed that from time to time the company has been acquiring a lot of companies in different business sectors. So in the recent acquisition also, they have acquired CG Power, which is also a huge company. So like this, they will keep acquiring different companies and fuel their inorganic growth in different business verticals. So like this, they have a very clear strategy of growing their business in three directions. Now, while they grow their businesses, what are the risks which the company might face on a broad level? They could face a risk of obsolescence of technology, as most of the businesses they are into are technology related. So they have to keep upgrading their technology, and if at all there are alternatives coming, they have to adapt their alternatives and move forward. Otherwise, their products will become obsolete. There could be a risk of sourcing, wherein the availability of raw material could be at risk because of the supply chain disruptions. There could be a high increase in the price of raw materials because of which their margins may be under pressure. So these kind of risks might be there for the company. There could be industry risk, where there is a lot of competition within their business segments. As you have seen in the competitor slide, in each segment there are several big companies competing with them, and so there is fierce competition with this company. And another risk is that a lot of dependency is there on the user industry, and a lot of industries like auto and construction, which this company is related to, are a bit cyclical. So if there is a down cycle going on in that particular sector, the business of this company will also get affected. So these are the risks which you have to keep in mind and closely track while you have invested in the company. Now, after discussing the business analysis, let's come to the numbers, starting with the Q4 FY22 results. While we analyze the results of this company, you have to keep in mind that the recent acquisition of CG Power is also taken into account. Most of the results which we are discussing are consolidated results, and if you see a sharp up move in the financials or the financial items, you should understand with a pinch of salt that these figures also include the CG Power acquisition which was done in the recent times. So in Q4 FY22, the company did a revenue of 3,400 crores, which was 2,733 crores earlier. EBITDA 356 crores versus 277 crores earlier. Profit after tax 179 versus 135. And EBITDA margins are same at 10%, and profit after tax margins are also same, somewhere around 5%. So the quarterly results were satisfactory by this company. Now let us compare the growth in revenue in the last 5 years segment wise. So engineering segment, if you observe, has grown from 2,200 crores to about 3,868 crores in the last 5 years. But this includes the revenue from CG Power also. So if we exclude that in the last year and see, more or less the engineering segment revenue is going flat, and there is not much growth in the engineering segment. Coming to the metal formed products, again in this segment also the revenue is flattish. There is not substantial steady growth in the company in this segment every year. Coming to the mobility segment in the last 5 years, again if you observe in this, maybe due to COVID or due to any reason, there is a substantial fall in the revenue from 1,300 crores to 980 crores from FY18 to FY22. So there is again a degrowth in the mobility segment of business in this company. On a standalone basis, excluding the subsidiaries, if you see the revenue trend, it has gone up from about 4,500 crores to 6,359 crores in FY22. So on an overall basis, the company has grown well because it has started new verticals of business and also grown the existing verticals. Looking at the consolidated revenue, it has grown from about 5,000 crores in FY18 to about 6,000 crores in FY21. It jumped to 12,000 crores because of the acquisition which they did recently. Looking at the EBITDA, now these are all consolidated figures. EBITDA has grown from 374 crores to about 1,400 crores. EBITDA margin has improved from 7% to 11% in spite of the acquisitions which they have done. So this is commendable. Profit after tax has gone up from 147 crores to 769 crores. Another couple of things we have to keep in mind is, after the acquisition, in the next few years, we have to see whether the growth, whatever they have achieved, is sustained or not after the acquisition, and whether it will remain at the same level, whether it will continue to grow at a decent rate or not. And another point is, although they have done an acquisition and grown the company, but the value of the company has in fact increased, whether it is through organic or inorganic ways they are growing it. At the end of the day, the valuation of the company is growing as they are investing into profitable, sustainable businesses, which we as shareholders want. The profit of margin has improved from about 3% to 6%, which is a good sign. Equity is fairly constant across the last 5 years. Reserves have steadily grown from about 1,200 crores to about 3,000 crores in FY22. Borrowings have been more or less same, as they have reduced from 1972 crores in FY21 to about 800 crores in FY22. Trade payables have increased. Now here you have to observe that there is a jump in trade payables to about 2,200 to 300 crores. So I have observed that the trade payable days have not increased, which is giving us a relief. But in the next few years, you have to observe whether the trade payables also reduce and come back to normal, and they don't substantially go on increasing, which can be again a red flag. Fixed assets are steadily growing. They have improved to about 3,300 crores in FY22. Inventory has slightly gone up along with the business as the revenue has gone up. It is at about 1,300 crores in FY22. Inventory days are substantially high in FY21, which is 111 days, but they have come down to 58 days, which is a good sign. Now we have to, going further, we have to see what are the normal inventory days for this company and whether in future those levels are maintained at the similar rate. Trade receivables have shot up to about 1,800 crores. Thankfully, the trade receivable days are just about 50 days, which is a relief to us. But a substantial increase in the trade receivables is also not a good sign. We have to see whether after the merger in the coming years, these trade receivables also get normalized. Now coming to the cash equivalents, it has improved to about 500 crores. So in terms of liquidity, the company's position is quite stable. As you see, the operating cash flows have also been positive in all the years, and they have generated about 877 crores of operating cash flows in FY22. Free cash flows have also been positive in spite of doing so much capex and inorganic acquisitions. They have a free cash flow of about 600 crores in FY22, which is again showing the strength in liquidity position of this company. The ROCE has improved from about 14% in FY18 to 29% in FY22, which is a very good sign of growth for this company. Dividend yield, it's just about 0.2, so it's paying low dividends, but still it's a dividend paying company. ROC is good as the ROCE also. Stat auditors are one of the big four firms, which is SR Bartley Boy and Associates LLP, and the remuneration to directors is about 9 crores. And there is no material risky related party transaction. So in terms of corporate governance, the company looks very strong. Now let's discuss the shareholding pattern. The public holds about 13% share in the company, and a lot of shares are held by the institutional investors, like DII is about 14%, FI is about 26%. So close to about 40% of the stake is with the institutional investors, which boosts our confidence in the genuinity of the company. And the promoters hold about 46%, which is slightly on the lower side, but fairly enough. There's a minor pledge of 0.1%, and it will be good to observe that Azim Premji Trust holds about 1.46% stake in the company, which also gives us an additional confidence of investing in the company. Now let's talk about the valuations of the company. The last trade price was about 1,700 rupees, 52-week high and low is from 1,000 to 2,000 rupees. Last 1 year, the stock has given 47% return, and in the last 3 years, it has given a CAGR of 66%. So it's done very well for the shareholders post demerger. The market cap is about 33,000 crores, so it's a large cap company, and face value is 1, it's not 10, and EPS is about 40 rupees, which brings the price to earning ratio to 44. The 5 years median PE is about 33, and the book value is about 159, which makes the PB ratio to almost 11 times. The market cap to sales is about 2.66 times the sales. So in terms of valuations, the valuations look pricey to me. So although the company is growing inorganically, still the valuations are looking on the higher side. So it's not the best time to just jump into the share and invest. Now let's look at the chart. If you look at the chart, the stock has a lot of support at somewhere around 1250 range. So that could be a range at which you can consider investing in this company. If at all you are satisfied by your own analysis in the looking at the financials as well as the business of the company. Now to summarize, what are the thesis points which can lead to our investment in the company? It's a Murugappa Group company, which brings in a lot of confidence in us as a investor. They have stable old businesses which are generating a lot of cash flows. Their new businesses are also fueling the growth as they are venturing into the electric vehicles as well as the optical lens manufacturing. They are doing inorganic growth as they have been acquiring companies in different sectors, and their diversification into different businesses will reduce the risk from the point of view of shareholders. Now, what could be the antithesis points for investment in this company? The few of the businesses which the company has exposure to are cyclical businesses, and there is a risk that the new investments which the company is been doing in the form of acquisitions, if one of their investments turned out to be a failure, there could be an impact on the financials of the company. The margins and return ratios of all the businesses are not the same. So the underperforming businesses or the non-performing or the low margin businesses will offset the high performing businesses or the high margin businesses, leading to normalized growth and normalized margins. So this is one of the disadvantages of investing in a company which is a conglomerate business. They are doing business in different industries, so the management may or may not have expertise in all the industries which they are working in, which could be leading to some failure in any of the businesses, which could be an antithesis point. And in terms of valuations, they appear to be pricey, so you should enter that the right valuation. So this is about Q Investments of India Limited. I hope you like the analysis, and I'm sure on the basis of this analysis you will be able to take your right decision for investment in the company. If you like the video, hit the like button and subscribe to the channel. Don't forget to hit the bell icon so that you can get all the updates on my channel. If you are not a part of the Telegram channel, do join right now. And if you want me to make videos on your favorite companies, don't forget to name that company in the comments below. I will consider them for the upcoming videos. So thank you for watching and have a wonderful day.